Hello and welcome. This is the Market Wrap. I am Agam Vakil. Well, what we've seen in the markets today is a little bit of a pause after the kind of steady gains that we've seen for the benchmarks over the past few days. Today was the day where we saw a break applied, if I can call it that, considering the benchmarks did close with a loss of 3 tenths of percentage points. The losses were not that deep, and a lot of this had to do with a handful of counters keeping the benchmarks, well, perhaps buoyant, if I can call it that. As far as the Nifty is concerned, that was down around 3 tenths of a percentage point, but we did have a lot of strength in the likes of Axis Bank, which was up around 6.7%. Gains in Titan Company, which is up 5%. Power Grid, Z Entertainment, and ITC. ITC is another heavyweight, which did advance by 2.5%. It's been fairly range bound off late, but today was a day where it did make a little bit of a move. Let's not forget, Reliance Industries is one counter which also stands out, not because of its intraday gains, but because it moved above the mark of 2,000 rupees a share. So that was another very important development. And of course, on the losing end, we saw Hero MotoCorp, BPCL, and HUL under pressure. HUL, of course, reacting to earnings. More importantly, perhaps reacting to the ex-Holics decline in volumes that the company saw. Tata Motors and Tata Steel also weighing on the indices. Let's talk about the broader markets then, and the picture may not be very different there because, we have seen, the advance decline ratio remain fairly even between the advances and declines over the past few days. And perhaps if we can, take a look at what's going on in today's day of trade and how things have turned up, well, you'll see that while we do have a lot in terms of momentum for the gainers, we only have one gainer for two losers on the NSE 500. So Bama, Lorry, M&M, Dhanuka Agritech does stand out. Dhanuka Agritech reacting to, well, possibly earnings and what strong momentum this stock has seen over the last 12 months, over the last 6 months. Dhanuka Agritech certainly does stand out. Hindustan Zinc, we have Himatsinka, VIP Industries, all advancing with good gains of well over 7%. Of course, on the losing end, we have a TV18 broadcast under a tad bit of pressure. Himadri Speciality also reacting to earnings under pressure, down 6%. Kolte Patil, Eclerc Services, Gujarat Fluorochem, all down in trade. On the whole, not the best day of trades when it comes to some of these broader market indices, but there were certain stocks that just stood out. But perhaps can give us a better picture of how things are shaping up right now is our market senator, Niraj Shah, who's joining us. Niraj, how are you reading into these markets? Good afternoon to you.
Good afternoon, Agam, and pretty similar to the kind of observations you made, really. I mean, that's actually quite comprehensive, to be honest. But yeah, just a couple of additions to that. One is that the global markets have looked a bit soft today. So quite unlike yesterday, or day before yesterday, wherein India was that standout performer while the rest of the pack wasn't quite doing all that great. In today's session, the rest of the world has also come off. Look at Europe, for example, 1% lower for each of these indices. And considering that Europe was anyway soft, I think it was remarkable the way we recovered towards the second half of trade. So that was one key thing. The indices have corrected in line with global peers. The dollar index, which has been on a consistent downtick for the last few days, actually showed a bit of a rise today. So keep that in mind as well. Typically, the dollar index fall augurs well for EMs, etc. I'm not saying that's a apple-to-apple, one-to-one correlation always. If it becomes a trend, it becomes a correlation. But after a long time, we saw the dollar index rise a little bit after coming off quite a bit. I think IT and auto, as Agam mentioned, kept the indices in check. I think both of these indices, auto was very active in trade yesterday, IT very active for the last few days. So today, both of these coming off kept the indices a bit in check. And we didn't have, I mean, save for Reliance, which was up about a couple of percentage points, we didn't have a really dramatic performance from Reliance as well. This is the auto index, and you can see the kind of losses that these indices had. Nifty IT2 and had a fair degree of components which lost out. Infosys down 2%, Wipro, TCS, etc. So all of these came off, and that was one principal culprit. I think that, though, in my mind, a couple of standout features today of trade. One, the insurance players. It was known that the quarter will not be that great, and it was a tepid quarter. Outlook given by the management was positive, but somehow all the insurance companies corrected in the session today. So HDFC Life, ICICI, SBI didn't have the best of days, to be honest, and it remains to be seen if indeed the market were to give them some positivity in light of the fact that the valuations look a bit stretched. So that's a bit of a problem when it comes to these insurance players, be it HDFC or ICICI Pru or some of the others. But time will tell. But in net, a day of consolidation, no alarm bells as yet. It'll be interesting to see Agam what the FI picture looks like as well. Because even on the FNO side, I mean, yesterday there were longs added, there was a premium versus a discount. So it looked all solid, but somehow today kind of we just meandered along.
Yeah, Niraj, what stands out for me is the Nifty put call ratio. As I suggested yesterday, it had gone up to around 1.8, which was quite high, and which did indicate that there was some amount of fatigue which was setting into the markets. It did play out, but the funny thing is, and of course we'll wait for the Bhau copy to come in, but even still, at this point in time, the Nifty put call ratio still stands at well over about 1.75. Again, as I said, we'll wait for the Bhau copy for the final number, but 1.75 is still a reasonably high Nifty put call ratio, which means that it is going to be really hard for the indices to take out 11,300, 11,400 in the near term, at least until the next week's monthly expiry. And that is going to be important. There are a handful of counters out here which are supporting the Nifty in its climb. And over the previous few days, we did see heavyweights like Reliance Industries, to a certain extent, a handful of other FMCG companies, playing their part. The real question is how long can three or four companies support the index at this point in time for an advance to, well, that's something that we're going to keep an eye on, because for now we certainly see a lot of accumulation around the 11,500 put, and specifically a lot of writing around the 11,300 puts as well. So that is something, that's a level that, well, it's going to be hard to take out. It's not impossible, also not that improbable, but still, there is certainly a reverse resistance there, and we will be keeping an eye on 11,300 at this point in time. Well, on that note, it's a wrap on the markets, but there's lots more lined up. Stay tuned to Bloomberg.